We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelming on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics, and welcome to part 2 of my conversation with Vince Lanci and Tom Luongo, where we discuss everything about Europe, gold, LIBOR, Western foreign policy, and all kinds of things. I hope you enjoy it. I think this is an important point that is worth kind of drilling on a little bit more. And Vince, you wrote a little bit about this. You know, the importance of setting up another, gold convertible exchange here. How does that, cement, as you said, cement transactional habits in the price shown? Like, how does that end up, in a lot of ways, decentralizing it and allowing for better price discovery of gold in the long run?
Okay. So yeah, that's fresh in my mind. So I won't ramble on it. It goes back to without going too far back. People talk about the supply chain. You should ask them, what is the supply chain? I'm going to tell you what the supply chain is for gold anyway, right? You pull it out of the ground, you refine it, you ship it, you refine it further, and then you use it, whether it be for storage or electronics or jewelry. That's a supply chain. It's extraction, refinement, added value, and then installation or use. Okay. Over the last 30 years, but accelerating in 2014, not coincidentally, the time that TL was talking about the changes in Russian oil, I would say Chinese oil pricing. The demand, it's basically, it's capitalism, okay? The first premise is, and this is not mine, but I will own it, is that in commodity trade, the nation or region of purchasing, of demand, is the one that determines the flow, not supply. Okay, so you pull oil out of the ground, nobody wants it except this guy way over there who's going to make it into Vaseline, whatever, KY jelly, right? Something that really screws everyone over, right? And so the guy with the oil in the ground, right? He's going to, the customer's always right in commodities. The customer's always right. So now let's just go to oil or gold or any commodity that's geopolitical. And this is, if you're geopolitical and you look at commodity flows, you'll see this. But I am staying on point and answering the question of the pricing of gold. If you look back, starting in 2014, without going through the timeline too much, it's kind of like this. The demand, well, we use gold, but it works with oil as well. The demand for gold went east. The fresh buying of gold was the emerging middle class with the emerging wealth coming out of China, just staying with China. And so they start buying gold. It comes through the COMEX, it comes through London, it gets sourced all over the place, but the pricing is in dollars. So you're in China going, I want $5 worth of gold. I want you're talking in dollars, right? Dollar hedge money. And so what ends up happening is the American businessman, we'll call him JP Morgan, says, oh, wow, all my customers are in China. I'm tired of flying to China. I'm going to move my office to China. I'm going to open an office in China. So you get more face time and you get a better relationship and you get more business. And the customer says, the Chinese customer says, I'm buying all this gold. I want to keep it in London. I want to see it. I want to hear. And so the JP Morgan guy says, you know what? And by the way, just as an aside, all financial transactions are based on real things. I'm giving you the real supply chain, right? So the JP Morgan banker says, well, we could open a vault here. We'll do that for you. We'll charge you custodial fees. Bitcoin people pay attention, right? And so Singapore starts opening vaults up, run by JP Morgan, run by the LBMA, all those guys in the LBMA. So now you go back to the customer. The customer says, thank you very much for storing my gold here. right? But the gold in London is kind of, it's in rectangle bricks. I like to have them in, squares. Oh, well, then we'll finance a refiner, which is what the Saudis are doing, right? So the refinery moves there. So now you have the manufacturing industry moving over to the east. So now you've got the JP Morgan banker with his vault next door and his sales office and his customer who saunters out of his house and goes, I think I'm going to buy some gold today. Would you like those in squares or rectangles? Squares. Okay, and that's just all added value service. Do you want undercoating with the car? That type of shit. And so now the customer is like immensely satisfied. It's all demand driven because gold and other commodities are raw materials. It's what you do with it that matters. You want it. I don't give a shit what you want it for. You want it. So now this is all against the backdrop of dollar reserve currency. So the demand moves east, to give you the flow. The businesses move east. The storage moves east. The refinement moves east, the manufacturing of the finished product. This is your supply chain. Your supply chain, piece at a time, is moving east. And now the customer goes, I get paid in yuan every week. Every week, I got to convert that shit into dollars to buy gold because we're using a price on the COMEX in the US. I'm not even awake when that happens. That's bullshit. Can we use yuan? And the JP Morgan banker says, and he says this, he goes, well, the dollar is the global reserve currency. What we're going to do is we're going to create a yuan dollar swap, and we will facilitate that. And of course, there's VIG there. There's edge there. And the banker's making money. So now you're creating another business. So now the banker is I'm the broker of the gold. I'm the storer of the gold. I'm the refiner of the gold. And I'm the currency arbitrager of the gold. But it gets big. All the banks move over there. They all start doing it, right? And so now you've got all these banks doing this, and you've got massive over-the-counter dollar yuan swaps. And then someone says, picture the CME of Asia says, wow, this is a pretty big business. We want to get into this business, this yuan priced gold. Now, it's not happening this way exactly, but this is how it happens organically. And the exchange says, you know what? We're going to create a yuan listed gold contract. And the OTC guys, and this is how it works, the bankers say, screw that. We're not putting our flows on there. We are the market. Your exchange product sucks without us. I'll give you a little color here. This actually is happening in the US. And the exchange goes, I'll tell you what, guys. If you put your flow in this exchange, we'll give you a rebate, we'll give you a piece of the money, and we'll guarantee you flows. Well, the JP Morgan guy goes, well, okay, we'll start clearing our swaps on your exchange. And the customer's like, well, we're happy. And now what you have is you have a bona fide, this is where we are in the cusp of right now. You have a bona fide exchange contract with critical mass flows pricing the commodity in the local currency. When that happens, when the customer says, I want to buy gold, it comes, it gets stored here, oil too, it gets refined here, it gets priced in my local currency. This is the whole Bretton Woods 3 concept. It's priced in the local currency. It ends with, well, why the fuck are we holding dollars? And it ends with, you're still calling it the global reserve currency, but you're not using it. So all the dollars that and this is how the global reserve currency deteriorates. Forget the labels and the brands, but whereas I used to, as the Chinese customer, right, who would be buyers of gold, whereas I used to always have dollars in my account because I'm buying gold at the end of the month, I don't need them anymore. And so those get orphaned. I swap into yuan. I don't need to get dollars anymore. And those are just floating out there. And this is where TL is talking about, and that's why we're raising rates. We want to pull that shit back and repatriate it. And in doing so, whether we want to or not, we're destroying Europe because the euro dollar market gets drained out. And so, and that's the weekend is Europe. But that's another conversation, an important one that TL talks about a lot. And I've come to see the light on that. So this is how a global reserve currency dies. Now, I'm not saying it's happening tomorrow. I'm not like, oh, it's the end of the world. No, it's not what's happening. There's a lot more to it than that. But that's the flow. The supply chain is pull it out of the ground and finish it, right? And little by little, that supply chain's been moving east. The last thing, the last domino is pricing power. So when you pull up trading places and they say, turn those machines back on, that whole scene, well, aside from the humor and the poignancy and the victory of it, they're talking about pricing power. If the machines are on, if the market is open, the transparency of that price sets the price. What happens when those machines are in Shanghai, in Moscow? That's where the price is set. So before you know it, not before you know it, but over time, we'll be trading grams in the West. We'll be trading in rubles, converting to dollars. So people aren't holding dollars as much. So that is, and ironically, not as an aside, we talked about mercantilism. It's kind of decentralization of money, which means the whole multipolar concept comes out. Dollars are still the global reserve currency for good reason. I'm not going to get into what they are, but commodities trade in local currencies, and that's multipolarity. Finished goods, you got to have dollars. You want jets, dollars. You want gasoline, dollars. But local oil, gold, silver, coffee. You're able, decentralization, whether it's blockchain, whatever it is, but the tools like blockchain are tools to help us manage this whole mercantilist environment. So I hope that answers your question about how the supply chain has little by little moved east. And the last thing, and this is linked to something Tom and I talked about, TL and I talked about 6 months ago, and that is, if you want to have your finger on the pulse of this, as he does, is you want to just watch the volumes on a new contract on an exchange. Are the volumes going up? Yeah, they are. Are they going to continue going up? Well, is it a trend or not? I don't know. But it's there, and maybe the pie's getting bigger. More people are trading it. So the CME and the COMEX volumes don't drop, but the Shanghai exchange goes up. That's how it starts. It ends with the migration. I mean, everybody who looks at the volumes, looks at the vaults in the West getting drained, they're just figuring it out now. It's been going on for 10 years. When you look at oil, bringing it to oil, it's like we are, and this is an aside, but it's the West combating the phenomenon I'm talking about.
Yes.
The East, for example, using oil, the East is saying we don't want to price oil in dollars. And the West is saying, well, oil's priced in dollars. And the East says, well, we're not going to price it in WTI. We're not going to use it as part of our basket. The West says, and this is the whole Anglo-American, conspiracy. The West says, and I'm not making this up, the West says, well, the basket that you guys price it off of is Brent, and that's part of your pricing. It's indexed to that. It's like a spot's not the real price. Yeah, but you use spot when you make your price. So that's the whole point of it, right? So Saudi Arabia's go, we're pricing off of Brent. Fuck you, WTI. And the U.S. says, well, WTI contract is now going to be part of the Brent basket. So all of a sudden, the lower we get WTI, the lower Brent gets, and the more it punishes the BRICS who are dependent on oil revenue. So it's a matter of can we, this is the whole long-term thing. Can we outlast them? So if you want to bring it back to gold, which is where the question started, it's like, when we run out of gold, they win. Will they collapse before we run? So will our inflationary problem get worse more than their deflationary problem? Because their economies will collapse without selling oil. Anyway. So that's a long.
No, I think you're absolutely right, Vince. And again, we get into this, and again, it goes back to the same thing that I've been talking about for a long time. Why is the dollar the global reserve currency? Because it was the cheapest currency to operate in, because it was such a deep and liquid market that dollars were cheap to transact in. It was incentivized to transact. I'm not talking about interest rates here. I'm just talking about the infrastructure of moving. I've got dollars. I can move them. I'm not talking about interest rates here. I'm just talking about that. Now we go sanctions happy. and we start making it expensive to do business in dollars, because by cutting you out of the dollar trade here, and by cutting you out of the dollar trade there, and all you're doing is incentivizing people. You're raising the cost of using dollars,
Right.
for Iran, Russia, all of these people that we don't like, and then they have to figure out workarounds.
You're reducing the convenience premium. Because I'm about to write on this, and I want to interject this. Geopolitically, this is really, I think this concept is important. Is geopolitically, change comes from crisis.
Yes.
You need to change global reserve currency in this example, right? So we needed to get on the dollar after World War II. We needed all that, okay? And what happens is, after the crisis is over and people are comfortable and they start to interact and trade again, then you build up infrastructure around it. You build up conveniences. We're going to price this in dollars. We're going to do that. We're going to give you free toaster if you use dollars. And what ends up happening is you create convenience around the crisis, that even when the crisis is abated, we've solved the problem. Pax Americana, right? You have the convenience. We have treasuries in dollars. We have inventory in dollars. We have dollar signs on our spreadsheets. All these things are convenience. Why do you keep doing it this way, Grandma? Because that's the way I've always done it. Okay, so back to geopolitical. What makes geopolitical change? Crisis. Almost all reserve currencies die after major wars.
Yep.
All right. Now, we haven't had one yet, so maybe you won't see a precipitous decline in the dollar because we haven't had a major war. But you are seeing a controlled takedown, in my opinion. Now, my opinion aside, what we are looking at is the U.S. with its reaction. Obviously, Russia provoked it, right? So the Russia-Ukraine war, and we provoked them, and who the fuck cares, But it ends with our sanctions go across a line perceived by the BRICS. I'm a BRICS country. I'm a small BRICS country. Oh shit! Right. If they can take Russian money and those guys have the bomb, then what's the risk of us staying there, right? So the BRICS say, okay, the enemy of my enemy is my friend, et cetera, and they start to form. And then you move forward, and it's like, okay, we are in a crisis. The BRICS are perceiving that, whether it's right or not. We are in a crisis. We need to get off the dollar. There's your impetus for changing global reserve currency. And that's why I'm saying it must change. Now, everything since that, and actually before that, has been peeling off the conveniences. What do you mean it costs me $1 to use the ATM in dollars?
Right.
Well, I don't want to use that ATM anymore. So what do you mean and so you start peeling off conveniences. Setting up an exchange is a convenience. So I'm a merchant in Asia and there's sanctions. I'm still going to use dollars. I got them. It's acceptable. It's not as convenient, but it's still convenient. So you start peeling off the conveniences, the infrastructure that's built around the crisis.
Exactly. I literally have been saying this for 5 years, going that the dumbest thing that Trump ever did was putting shock and awe sanctions on Iran, because it just now it takes the convenience premium away from the dollar in Iran, and then forces them to then build that infrastructure to create convenience around the Iranian rial and any other currency that the Iranians any other currency that the Iranians are willing to trade in.
But I want to push back. I want to push back on that, because I think if you look at it as a multifaceted attack, we're going to try and starve Iran with the whole dollar sanctions, and simultaneously we're going to try and have these little green shoots. Economies that foster in democracy. Had that not backfired, we would have won. And so they're looking at
we could have won it. It was possible to win it.
No, but we didn't. We didn't. I mean, the point is, we're going to sanction Iran, and while they're weak, we're going to try and fucking plant seeds of democracy. And that shit didn't work. And so the longer we had the sanctions going on and not succeeding, the worse we looked.
Oh yeah. No, and the other point about this is that it's like, look, the shock and awe stuff always has about 3 weeks It's always about 3 weeks. It's about 3 weeks where there's real, honest to God turmoil. When the Saudis cut the Qataris out of the exact thing. But I remember that situation, and there was oh my God, is Qatar going to fall? Right, because the Saudis were trying to take out Qatar, and it didn't work. I said, and I remember literally doing podcasts back then that nobody watched, and writing about this stuff and writing articles for Seeking Alpha that nobody read, saying it's got about 3 weeks. If the Qatari government doesn't fall in 3 weeks, it's not going to fall. The situation will stabilize, the crisis will be over, and then we'll be in the beginnings of a new pricing regime for the Qatari economy will begin. And they will have gotten the message that they don't have any friends. And so they will no longer trust the people who did the thing against them ever again. In this case, it would happen to be the Saudis. Now, it's exactly the same thing as happening with the Russians, with Iran, with Venezuela, blah, 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 blah. All of this is happening, and there's no way to put that cat back in the bag because you've broken a look. Here's the real world example for you. You go to your favorite restaurant 20 times in a row. You get a great meal. You go to that same restaurant the 21st time, and the cook has an off night, or they blah, blah, and you have a bad meal. The server's surly, blah, 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 blah. You have a bad meal. It's even a meal that makes you sick. Are you going to go back to that restaurant? No. Like, the free market is absolutely, and things like that, the free market, consumers in the free market are absolutely fucking ruthless. Okay? I'll never buy another Subaru because these people treated me badly over one of their engines blowing up. Okay? It's that simple. Like, it's that simple. I'll never buy another one, even though I think their cars are good. Why? Because. Period. Well, I got news for you. It's the same. It's taken 20 years for me to even consider looking at a Subaru again while looking for a car for my daughter. And then I'm like, well, there's still CVTs and all their freaking cars. So, no more manual transmissions? No. And I'm not buying her a WRX. Done. Because she's 17. That would be stupid. I would be a bad dad. I would be buying that car for me. Okay. Right. So, no, not going to happen. Like, this is, and you have to take that to the geopolitical level, because these things, because you're fucking with an entire country. The whole idea that we could get the shock on Iran, and that the people would not, that the government, sitting government would not successfully market this as evil Satan, the United States is trying to destroy our country. Yes. And even the people who hate the mullahs in Iran will be like, yeah, they're our devil. The hell with you. You're not, we know who you are. You're just as bad, if not worse, than the people you're trying to overthrow. We'll stick with those guys. Like, and this is what Putin has been very good at doing this in Russia, and advising other people who are under the same kinds of attacks, okay, on how to project strength, on how to beat the color revolution thing. Because the color revolution thing, because the Brits have been doing this shit for 300 years, like, seriously, they've been doing it for this long. Like, it starts with internal destabilization. It starts with undermining. It starts with putting, NGOs in place, with the old versions of the same thing, so the East India Trading Company and all the rest of it, in order to build a groundswell of discontent, and then use that to sweep a new government into power. But everybody can see the playbook now. The playbook doesn't work anymore. It doesn't work nearly as well as it ever had. It hasn't worked well in a long, long time. Okay. And even when it worked during the Arab Spring under the Obama administration, a lot of those were reversed. Egypt, for example. Right. Okay.
It didn't work.
So it worked, and then it didn't work. Right. So, and now Egypt is leading the charge to unwind the IMF mafia, the IMF mafiosi shakedown loan sharking thing. And the Chinese and the Russians.
Everyone's just like negotiating now. It's like, we were your friends, but you know what? We think we want more out of this now. Oh yeah. It's open season.
So when you look at it from that perspective, there's a very good reason why the Russians believe that they can outlast, because there's been such an overwhelming amount of, for lack of a better term, fuckery that's gone on over the last 15 years that it's very clear what's being done here. And this is now just there's no longer any benefit. There's no carrot left in these negotiations. It's all stick.
Right. And
it's all stick. And because it's all stick, these people are not going to, so yeah, we're trying to do the carrot and stick thing with Modi in India. Like, so he came over and signed a whole bunch of deals and yada, yada, yada. Do you think he's not just sitting there going, yeah, we'll just take the Americans' money because we. And I think the same thing. I think Prigozhin did the same thing. That to me is an easy read. That Prigozhin said, "Oh yeah, we'll take the Americans' money. We'll stage a walkout. We'll stage a strike. We'll get what we want out of Putin, and we'll get what we want out of the Americans."
Right, double agent, triple agent.
Not even double agent. It's just like, dude, like you're dumb enough to believe that you think you can buy me with a couple of $1 billion.
Right.
Really? Okay.
But I say
All
double
right,
agent.
and I firmly believe, having watched the situation in Russia over the last 10 years, that we don't have a ground game in Russia. We don't have a very good ground game. The MI6 doesn't have a very good ground game. There's no embassy left. There's practically no embassy left. Like, why has there never been a color revolution in the United States? Because there's no U.S. embassy there, right? I'm serious. Like every time, you can almost make the argument that all of these diplomatic rows that we've had and throwing diplomats out of each other's embassies over the last 5 years, 7 years, the Russians have been like, okay, do that. That's great. That's just giving us reason to get rid of all your people. I now know how I don't have to spend money monitoring them anymore because they're not around. I can now redirect those people to the real fifth columnists and the real sixth columnists. And that's why I just don't think there's any ground game. So it would be easy for me to believe that our guys at the CIA and or MI6 would believe Prigozhin was turnable. Okay, and it makes sense to me because they don't have much of a ground game. And when you also really factor in the idea that, look, I don't consider the CIA all powerful. I don't consider even MI6 all that good at it. They're the best at it, but they're still not all that good at it anymore. We're talking about late stage bureaucracies at this point. Okay, we're talking about sclerotic organizations that don't pass real information up the chain of command because they know their boss doesn't want to hear it. So they give them what they want to hear, and they just say to themselves, you know what, it's above my pay grade if I'm giving them a lie. That's the lie they want. It's above my pay grade to care about any of this shit. And I was talking to somebody about this the other day, and I can't remember, and it popped into the conversation. I'm like, oh my God, that's exactly correct. That it's even worse than my argument about the ground game being weak. It's like, no, you've got a bureaucracy that is so allergic to real information, making it up the supply chain. I know where I was having a private conversation with a friend of mine about this, and it came up in conversation. And when he brought it up, he's like, yeah, there are all these people within the military industrial complex and within Congress and the echo chamber in DC. And the way I described it was, so what you're telling me is that it's an echo chamber so small it would rent for $400 a month on the Upper East Side.
No, it's yeah, exactly.
And he went, yeah, exactly. And so because of that, they're not getting any good information. Lindsey Graham thinks that's, the killing Russians is the best dollars that we've ever spent, because they think that, because going back to Vince's point earlier, that we think we're winning because of the information that we are self-selecting. Now the self-selection bias is so bad that, we just believe as my dad would put it, we believe our own press clippings. My dad used to say that about professional athletes who came to New York, right? They came from, we bought like Dave Winfield from San Diego. He comes to New York. He's a big out. And we're like, yeah. And the guy, he's no longer playing this. He's no longer hungry anymore. He now believes his own press clippings to the point where he's hot shit. And this, and that's that. And you could always see it happen. And especially in New York sports, because of the pressure cooker that was New York sports, certainly going in the 70s, 80s, and 90s. And it's a different place for these guys to play in. And if you believe your own press clippings, you don't put it out. You don't put out the same effort you did before. And yeah. And I think that we have a lot of that within our political class and within our intelligence class and within all of our permanent bureaucracy. And the people at the upper echelons of all of these alphabet agencies setting all these policies, are literally living in a world, in a solipsistic fugue that, I hate to pull out the 25-cent word, but it is one of my favorites, but it's because it's so unbelievably true that they can't even conceive of an alternate reality. And that actually is the most dangerous part of this, because that means that the policy is not going to change. And now we as analysts have to bracket for that being the baseline for what's coming in next in terms of policy. So
Right.
So I want to ask something. I know we're, running a bit long here, but there's two pieces of this that I think are super important. And exactly to your point there, Tom, where, if people are making decisions based on thinking that nothing is going to change, there's this meeting in August with the BRICS Plus, there's been a lot of noise made about them actually announcing what this new, trading currency is going to look like. So do you think that becomes a monumental shift, or is this more of an incremental slide against the USD?
I still think it's more incremental than anything else. Again, I go back to Powell going to China, talking with the head of the PBOC. I go back to Diamond meeting with various Chinese businessmen along with members of the Politburo and organizing that trip. And I say to myself, they're managing the shift as best as they can. And the question then is, what response is going to occur? Look, everybody can see each other in real time here. Okay. We talk about the battlefield where you can't move troops, secretly on the battlefield anymore because everybody's got satellites and all this other stuff. Well, it's the same thing in geopolitics. They don't see what each other is doing. And so now the question is, can they pull off? This is where the intelligence agencies are important, because they can still move people around kind of mostly in secrecy, and then set off some kind of false flag that puts us beyond the point of no return. And this is what I'm more worried about than anything else. And then, because I don't see how you're going to get the kind of catalyst that you need, and that they're going to need in any other way. So then the bigger question is, and this again goes back to, okay, so look at the financial markets. We're in this kind of lull where all the current policies are in place and now are on autopilot. And you've got Lagarde mucking with credit spreads to keep the European Union solvent. To Vince's point, which is what I know was the inciting incident for this talk, which we haven't even discussed yet, which is the note about the German central bank, the Bundesbank, needing a bailout.
Right.
This is the thing. This is what we now need to talk about. This is the 800-pound gorilla in the room that we need to talk about, because we are approaching that moment where someone is going to run out of other people's money, and to invoke Maggie Thatcher. And I've been saying for a long time now that it's going to be Ueda over at the Bank of Japan is going to end yield curve control. And he pretty much told Lagarde he was going to end yield curve control the other day. There's a video. There's a 25-second clip of Ueda and Lagarde sharing the stage. And he had this kind of cat ate the canary look on his face when he said, well, you do know that we've been doing QE for over 30 years in Japan. And she was not happy about this. So, but Vince, I want you to talk about what you think that situation is. Because I know this has been something that's on your head, and you wanted to talk to me about today. So let's get into that, and then that should probably tie a nice big bow around this entire conversation.
Wait, are you talking about the Bundesbank announcement?
Mm-hmm.
Germany going, yeah.
Mm-hmm.
Is that right, Tom? B, you wanna go into that?
I'm cool to go wherever. This is an interesting conversation. And
okay,
if I can add something really quick here, Vince,
sure.
Just remember your point that you're going to make about that. But Tom, you and I were part of a private conversation a couple of weeks ago here, and I wanted to add this in the middle of that conversation because I think it's really important, and it really truly displays how weak Europe really is. And that is them marking their assets to market versus, I want to say everybody else, but let's say the US not marking their gold to market, right? They have it on their balance sheet at, what is it, $42 an ounce?
$42.22 an ounce.
Okay. So when I first learned that, it blew my mind. I thought, how ridiculous is this? I just totally didn't understand it. But now, it makes a lot more sense from a strategic standpoint. China, same thing. Why would they declare the actual amount of gold that they have? Right. Russia, same thing. So, these things, when I look at it, in some ways as an outsider, or let's say more naively, when I first started looking at them, it didn't really make sense to me. Now that I can kind of piece it together, it's a way bigger piece in this puzzle, and yet Europe seems to be the only one that is, putting their cards on the table and still having these issues.
Right. Okay, so that's actually good, because those two pieces are integral, meaning the move out of strength or weakness that Europe is considering with terms of, let's say, gold revaluation, and exactly how that dovetails into the specific comment that the German central bank made. Okay, first thing, focusing on the gold, Tom's point about Europe carrying from your conversation. Without getting too wonky, there have been articles written about it, but basically it's an accounting measure. We have gold, Europe has gold. We carry it on our books at cost. They carry it on their books at cost, but they have a GRA, which basically shows the profits or losses, they happen to be profits, that they have in gold in another category, another Excel spreadsheet cell. And they're not permitted to take those profits, however billions they are, and put them on their balance sheet. If they put them on their balance sheet, meaning if they put them on their central bank balance sheet or report them as income, right? What you have is you have a balance sheet rate. Think about your whole personal life. You have more money, and therefore your ratios are okay. And all of a sudden, all those losses from NERP bonds aren't as bad because you've basically tapped your savings account, right? You've tapped. Now, I'm not going to get into why that's horrible, because you don't do that, because for multiple reasons. As an accountant, I'm not an accountant, but as a person who understands accounting, you don't do that because you're just changing the rules out of convenience. But without judging it, just to walk through it, if you do that, I made the horrible analogy of you can't slap a child more than once. Once you tap that, you can't do it again. Mm-hmm. So using the rainy day fund negates the ability to bluff using the rainy day fund. So just actionably, it shows, speaking as a trader, it shows that they are the weak actor in thinking about that. Meaning, if you say, I'm going to the emergency fund, then you've gone to it. And you're showing that you need to do that to just stay in the game. And you're still hoping for some sort of other event to bail out, like, Putin stepping on a thorium thumbtack or something like that. But to the point that both of you made is that when you do that, let's say Europe does that, the US will say, well, they won't say, but let's say, sure. And if the US does it, exercises that option, which they won't, but if the US does that, that puts Europe as where they were, relatively speaking. And if China says, yeah, we got a lot more gold than we said, and we're going to do that too, that basically puts Europe for 5 minutes solvent. But it puts them in the relative picture, the weakest hand once again. So it's a self-defeating purpose. And I have an opinion on why they would consider doing that. But it has to do with central bank negotiation. We're threatening. So just to wrap that whole geopolitical aspect of it up, Europe can threaten to use to take that GRA, gold revaluation account, and actually put it on their balance sheet. They've already counted that money. You know what I mean? But they're officially stressing it because of the rules. So either you change the rules. This is what they do. You either do the right thing, and I'm not saying it's easy to do the right thing, or you change the rules. And that's what bureaucrats, especially bureaucrats on their last legs in a regime, will do. They will change the rules. So now you've got Europe pondering that, aloud. I almost feel like the Dutch banker that said that was a plant. It's like kind of saying to the West, hey, we're going to revalue our gold if you guys don't hook us up. I'm admittedly, it's complete speculation, but the U.S. is like, that's stupid. If you want to do that, go ahead, do that. We'll eat you for lunch. If you want to go apples to apples, we have that. Anyway, but now bringing that to the specifics of the this is tactical. The German, whoever the official German auditor is, the German auditor said that the losses are so big from the NERP bond losses, the schematic, that the central bank needs a capital infusion. Now, they may not have used the word capital infusion, but that's what it is. So there are several ways you can do that. So basically, it's going to be insolvent. So you can print more money, but if you print more money and you violate there are rules. If you violate those rules, then you're basically insolvent and you just debase your currency overnight. You can cut back and do fiscal austerity, but we've seen, using England as an example, we're watching it from Germany. England tried to do fiscal austerity with that mini budget, didn't work. Fiscal austerity is not working right now. It's all pot odds if you're looking at it from a fiscal austerity or spending point of view. So Germany's like, well, we can't do austerity, especially with all these immigrants coming in. What are we going to do? Well, if we tap gold, that's bad. I mean, it's good, but it's bad because let's assume that they have some cooler heads over there too. Now, I don't know that they're going to tap gold. I don't think they will. I think it would be foolish, but it might be their only choice. But I will say this, tactically, when a bureaucracy wants to do something, whether it be revalue gold or do something that lets them clear this solvency hurdle, they need an outside force to permit them. And the auditor cleared the path for whatever's coming next by saying the German central bank's going to be insolvent if we don't do something. So that does clear the path for gold being not necessarily repriced, but those theoretic profits being made real. And I've lived through this, not as a central bank, obviously, but as a person who would look at total equity versus open trade equity. I have profits, but I haven't closed my trade. And that's really what it is. I mean, so if you start looking at things like that, well, let's say I'm the US and I hate Europe. And Europe says we're going to mark our gold to market. The US is like, fine. We're just going to sell more gold and shit and make it shit the bed. We're not going to convert to gold. We could just spoof it because the pricing is still in dollars. So the conclusion is, as a European, to make the GRA a solution to the insolvency from the NERP bond problems is suicidal unless the US is on board. And right now, to Tom Luongo's observations, the US Fed and the ECB and all these other European central banks, they may be frenemies, but they're not on the same page behaviorally. And so when you look at that, I don't think, and this is speculation, I think that it's a negotiation or bluff by Europe's part. But the path is being cleared. We have to do something. It's kind of like when Powell says, I'm going to raise rates. And then Timmeros, the guy from the Wall Street Journal, says, we might pause. That's clearing the path. You get someone else to recommend you. I think Tom B is an excellent chef. Now, he can't fucking, boil water properly. But I said it. And if I'm wearing a chef's hat, all of a sudden he's a legitimate chef. That's basically, they're clearing the path. So I think the comment encapsulated is it's a real possibility that something is going to have to change to they're setting the table for, as an emergency measure, the GRA being put on the balance sheet. In the meantime, what they'll probably end up doing is they'll be like, all right, your thermostat's going to zero, you're going to sweat your balls off in the summer, you're going to freeze in the winter, and we're just going to conserve fiscally as much as we can while telling you that we're giving you money. So, that's the emergency measure. I hope that helps.
Yes, I agree with you, except for one thing.
What's that?
Right? Which is, I think the thing that's coming is that Lagarde is going to introduce a digital euro in the fall and is going to roll the Bundesbank. The goal is to roll the Bundesbank up into the ECB.
Oh, yeah. In fact, I'm sorry, but let me bring that back to what Tom asked. I'm sorry, you just got me back on track. The whole August meeting, big events or incrementally. So I'm on the incremental side. And to echo what Tom's saying is if you look at July, just to quickly, in July, FedNow is being tested. You've got Lagarde and the BIS. All these things are converging in July, August, summertime. Okay, so I'm going to give you some real boots on the ground, so to speak, explanation of why it's incremental. It's incremental to corroborate Tom's conjecture. Right now, go back to the whole commodities trading in the local currency thing, right? So if, these are assumptions I'm giving you, if the dollar remains the global reserve currency in name and primarily in asset of storage, and as Zoltan Pozar opined, and it's happening, commodities trade locally in their local currency. What are they doing in August? Well, I don't know exactly what they're doing in August. And Jim Rickards will tell you it's a big event, and on some levels it is a big event. But if you look at what's in place out there now, you know what's coming. They only announce after they've done what they're doing. And what they've been doing is, and it's real simple. It's all the BRICS, let's just say it's 4 countries in Asia, not all the BRICS. Just these 4 countries in Asia, I buy oil, you buy gasoline, you buy gold, you buy wheat. We want to trade in our local currency. Rupees, not rupees, but whatever. The 4 local currencies, Thai baht, whatever. Okay, well, I don't trust you, you don't trust me, but we all trust each other a little bit more than we trust the West now. Well, let's have our currency be backed or pseudo-backed or soft-backed by gold. How do we make this happen? Blockchain, and now you have something called M-Trade. There's other platforms out there. It's kind of like the invention of the car. There's a lot of platforms out there, but lowercase M-Trade is a platform literally with 4 exchanges or 4 money centers, and 3 of them are Asian. So let's say it's 4 countries: China, Thailand, Singapore, and I don't know, Vietnam. I'm making that right. And at all 4 of them, they want to trade oil in their local currency. And this little platform, this OTC electronic platform, facilitates that. And we're going to call that our currency. Our currency is this basket of whatever it is. I don't care what it is, but gold is involved in this process. Okay, so August comes and we announce that we're doing this. We've got our platform. We've got, again, this is kind of like critical mass. How much volume is on an exchange? How many participants are in the network? Who is ponying up money? Are they committing flows to it? Okay, so in August, they make an announcement. I don't know what the announcement is, but it's going to be something like that. But here's the point that I want, why it's going to be incremental. Who's at the hub? Who's the intermediary? Who's the overseer of those 4 countries? And this is not hypothetical. The Bank of International Settlements. They're already involved with BRICS. The Bank of International Settlements is at the hub of the M-Trade platform, okay? They are the broker. They're operating the blockchain. They are the trustless trustee. So why are they being there? Well, we're not going to judge that. The point is they're good at it. Everybody's got their money there. It's involved that way. And so that's it. So in August, it goes like this. This is the incremental concept. In August, you have a platform. And the platform is all of the BRICS, I'm making this up, all the BRICS are now going to trade our oil in, Vinny's, right? They'll trade in my currency, right? Which happens to be, pizza and beer. So that's a basket of pizza and beer. And they're all trading it in Vinny's, right? Right. And the US goes, about, let's just call it what it is. We're trading it in some form of gold. Okay. The West is not invited. Let's pretend it's really animosity. The West is not invited. You have to trade in our currency, the BRIC gold currency. And the West is like, well, fuck you, we're not involved. And the BIS is in the middle going, well, we can make that happen. And so instead of having an exchange, you have multiple exchanges. You have the BIS at the middle of this 4-pronged exchange. And now in the West, you have the BIS goes, well, why don't we create an exchange for us? And we'll create it's all about swaps. We'll create a swap from G7 gold into BRICS gold. And now you have this incremental situation where the dollar must acknowledge its BRIC counterpart, whatever it's called, BRIC gold. Mm-hmm. Right? And so if the West wants to trade, which by the way, this is all mercantilism again. If the West wants to trade with the East, they must interact on the platform. We're not going to invade. Let's assume that the East does fine. But that's how mercantilism went. In mercantilism, one of the aspects, depending on from country to country, was this. There were two monies. There was the money you used for international trade. You had trade account balances. And if you had an imbalance, if I bought too much from you, I made up the difference in gold. And then you had the money that you used locally. And that local money was bits of paper. Pseudo backed by gold, really backed by gold, who knows? But that's the money you use based on trust. So fiat was local and gold was used for trade. Now, just back that out. Central bank digital currencies for the masses are fiat. And if you want to do a deal from G7 wheat being sold to BRICS, people, then you have to be able to do a basket swap. Western gold versus Eastern gold. Yours is rectangle, ours is square. Who gives a shit? It's all gold, right? But the people don't matter. So what ends up happening is, and I'm taking this to a libertarian end, is if you don't have a means of financial independence, whether it be gold or silver or Bitcoin or what have you, your money's no good. It may be used, but it'll be completely debased. So you're not traveling, to a BRICS country using dollars because that's a central bank digital currency. Now, I'm not saying it's going to happen that way, but right. The point that I'm trying
it's certainly going to happen that way for the Europeans if they have to wipe out their balance sheet problem.
Dude, they're the first.
Right, they're the first ones that have to go to this, and then they have to wipe out their debts that way, and they have to conserve all of the quote unquote real euros and all the and this is why Soros keeps talking about perpetual bonds. What's going to happen to the Bundesbank is very simple. I think, Vince. I don't think they're going to revalue gold, or they're going to tap the piggy bank. I just think that the ECB will issue perpetual bonds and stuff the Bundesbank full of them and steal the wealth of the entire German middle class. That's what they're going to do.
Mortgage,
and they're going to give them digital IOUs to trade with locally, and that's what's going to happen. And
absolutely.
And they're just setting up for it. And Lagarde is making this abundantly clear. The woman came out with the dumbest statement ever. And every time I say this, or every time I even reiterate it or type it or anything else, I feel dumber having stated this, which is that their inflation problem is caused by climate change.
Yeah, that's a new one. Yeah, I like that. Well, it is.
It isn't.
No, it isn't.
They're creating their problem with climate change.
Tom, let me elucidate you on this.
Okay.
Because of climate change, it's colder when it should be hot. Therefore, Christine Lagarde has to buy more scarves, which creates more carbon, which reinforces the climate change, which causes inflation. The demand for scarves is the problem. And I think you should apologize to her.
Oh my God, dude, that's the funniest fucking thing I've heard this week. Thank you. But no, seriously, that's what they're setting up for. They're setting up for everything they've told you that they were going to do. They're going to do it. And Powell's sitting here going, we don't need to do that.
Right. And by the way, the bureaucratic MO, right, is if you can't solve the crisis, you're always punting or kicking down the road. And everything is about present versus future. So a perpetual bond, 30-year bond. And I want to throw this out there because we're talking about, Europe is kind of like ground zero. Lately I've been viewing Europe as the divide as the Cold War divide, and Ukraine as the new Berlin. They should just throw a wall up, let the war go on perpetually, have a Cold War, and hopefully we'll work our way out of this. In the meantime, I think that's the best case scenario. I think that's what the Pentagon has already come to the conclusion that is the best possible solution to this. Again, the other side of this is that, look, we haven't even discussed the 800-pound gorilla in the room, which of course is what you and I first discussed on the Palisades space when you and I first met, which is throwing gold down on the yield curve for the United States to fix their fiscal issues. And then we go one step further than that. And I want everybody to think about this. I guess I've had to reevaluate it. I was chatting with Daniel Booth the other day, and she made the point that, oh God, I hope I don't lose this now, which is, look, the fiscal conservatives in Washington are actually holding, again, we opened this conversation with how weak Biden is. Right.
Now, it's clear that if what if, and this is again a what if for me. I'm not happy about the debt ceiling resolution, but what if the whole point of the debt ceiling resolution was to just get it off the table, and then we'll fix it in post. Literally, we will fix this problem in post because we have Biden by the short and curlies. We have President Poopy Pants, and we're holding his depends hostage. Like, it's not hard, and we've got him. So now we can begin the process of asking for budget cuts, and we're going to threaten to impeach and not just impeach, but what's the word I'm looking for? Oh my God, indict him and try him for treason and all of it. I mean, this is all on the table. And so, maybe this really is that moment where we had to get through the debt ceiling in order to start creating some amount of global confidence that the United States is not descending into clown world.
So are you saying?
And then building off of that this is the beginning of the building off of that to begin rebuilding global confidence in the American institutional system. And that my biggest fear, of course, is that they light off a false flag that puts us past the point of no return.
Right. So you're saying that the fiscal conservatives are, I just want to make sure that I'm following your thread here. You're saying that in general, just generally speaking, the fiscal conservatives realize that the debt ceiling wasn't the fight to have. Let them have that, and then they will incrementally, in small bites over the long term, bring things back to where they should be.
Right. And one of the things that when I first started thinking about, my whole Powell thesis, right? One of the things I said very early on when I first identified back in June of 2021, oh my God, is Powell actually doing stealth tightening? What's going on here? And the whole thing kind of came to me in a flash. I'm like,
oh yeah, that was great. That was
I said, what has to happen here? The reason why this will work is it doesn't have to start all at once. We don't have to have the second coming of Murray Rothbard walk in and fix everything all at once, because that would just create chaos. No, what we have to have here is a signal from the United States that they're getting their shit together. The world does not want the United States to descend into anarchy and institutional collapse. We don't want the United States to break up. We don't want, any of the things that nobody
may
wants.
not have Chinese to throw gold out on the yield curve. We may not have to do. The point is, we have those things.
We have to start the process of telling the world that we'll go there, and then we will get the benefit of the doubt from the global markets, because and that will be enough to get through the demographic cliff that we're dealing with in Social Security, Medicaid, all the unfunded liabilities, and all the rest of it, and piece by piece, moment by moment, little by little, we do the right things. So you start with stealth tightening, you get the right people in place, you get SOFR involved. Again, why did SOFR kill LIBOR? Why did SOFR kill the Eurodollar? Again, a year and a half ago, Jeff Snyder was out there yelling at me, yelling that I was full of shit because there were no SOFR doesn't matter because there's no volume on SOFR futures. Literally 3 months later, the SOFR, the volume on the SOFR futures market goes ballistic, and then within a year, it's killed the Eurodollar futures product. It no longer exists anymore, right? Because we have a policy in place now. We have a superior rate in place now that the market is now, chosen, and it's happening. And here we are on the last day of LIBOR. We're doing this on the last day of LIBOR, folks.
Yeah.
It's all right here. And the SOFR futures curve is now telling us flat out that the market doesn't expect Powell to pivot before the end of the year. And the March 2024 contract is pushing higher. The whole belly of the SOFR futures curve is moving higher. I keep tracking it. I keep watching it. I haven't looked at it today, but I haven't had a chance because I've been working all morning. And every day it matters, right? And you just watch what happens with that curve relative to the various things that come out. But yesterday, after the economic data that came out, the GDP was better than we expected. The labor market was better than we expected. To Danielle Booth's points about this is a white collar recession, labor recession so far. So we're not seeing the tick up in unemployment. There's still plenty of blue collar jobs out there that people don't want to take yet. I still can't get friggin' I still can't get my local optometrist to open up on Tuesdays and Thursdays. They're only open 3 days a week. Half of my restaurants in town are not open past lunch on Mondays and Tuesdays anymore. Like, there's plenty of low end jobs in this market that need to be filled, and there's a whole bunch of tumblerinas who are getting fired from their tech jobs because guess what? We're at 5.25% now. Got news for you, tumblerina on Safe Space. You were never ever qualified to have the job you had at Twitter. You're going to have to go take a job as a waitress or managing or running the managing a register over at the garden center at the local Lowe's for a couple of years. This is reality. We need pipe fitters. We need plumbers. We need these guys. We need line workers. We need farmers. We need all of this shit. And none of that is going to happen if we stay at the zero bound. And you may have a good severance package from Twitter, and when that runs out, your student loans are still due, and you're going to go out and get a real freaking job. And then and that's why I don't think we're going to have an official recession until 2024, because spending will be just high enough and just robust enough, especially with the Biden administration dumping the SPR, getting gasoline prices. Here locally, they're down to $3.15 a gallon. Okay. So like the economy can putter along here in this state while the credit markets have to do a whole bunch of heavy duty negotiation in the commercial real estate space and all the rest of it. And then the private loan markets start to take over. And then this and all of these things that are out there. And like, it's a controlled it's a controlled demolition of the egregious leverage within the credit markets. The private equity guys are all going to go bankrupt. The insurance and pension funds are all sitting there like Johnny Bench, sitting there just waiting to catch good loans at 40 cents on the dollar to shore up their fund flows. We're going to fix the private insurance and pension systems, but you're telling me that under those circumstances that we can't cut the federal budget by 5%? Like, we can't now into that market extend the white collar recession into government bureaucrats sitting around pushing paper, doing nothing, just hanging on to their GSE jobs for to pad their pensions. Like, no, you got 20 years and you're done. You're out. Bye. Done. It's time for you to leave, and your jobs aren't coming back again. Like, we can do this. It's possible. All of these things are possible. Are they probable? Well, it's a different story. Is there political will on Capitol Hill to get this done this year? Maybe not. But as long as the early signals are there that we're going to be willing to do it, then those probability odds, those pot odds, improve dramatically. Right. And the key is going to be watching how the Biden administration, in the last year of its reign of terror, shifts to building blue collar jobs in energy. And you're going to have to let the price of oil rise and refill the SPR to get that done.
That's right.
And you're going to have to invite a little bit more commodity inflation while you have credit deflation. It's going to have to happen. It's going to suck. It's not going to be fun. But we can get it done. Danielle disagrees with me. Danielle disagrees with me, but that's fine. Well, she may be right. I may be wrong, but I'm laying out my case for it. And
they're never going to admit that they're raising the inflation target, but they are. That's basically.
So, and Powell, may not raise aggressively from here on out. He may not, but as long as he keeps shrinking the balance sheet, draining the world of euro dollars, because he doesn't have any choice, as you brought up earlier. The foreign, as to Martin Armstrong's point, made 3 years ago, there were more hundreds in circulation than there are singles. And those hundreds are sitting in metaphoric, mattresses all around the world. And they're going to come home, and they have to be sopped up, and they have to be destroyed. The singles are the domestic version of the American currency, and the hundreds are the banks of those sitting in people's bank, in people's vaults and people's safes around the world. And those are going to start coming home because there's not going to be as much of a demand for them, or they're going to get converted to gold, or. And it's a big, massive reorganization of global capital, and it's not going to be easy. But as long as we are committed to shrinking the leverage, and therefore And that leverage can be pulled down by just watching the credit assets fall in price. So guess what? I ain't long car makers, right? I'm not long used car resellers. I'm not long any of these people. I'm not long with anything that the Austrian business cycle would say is interest rate sensitive.
Right.
So the higher, and the only things that are going to be higher, that are higher production chain, and to this point, this is the other point. It's going to create a very, very brief period of time where the commodity producers will be the price makers, not the price takers. They should always be the price taker, because they, to Vince's point earlier, I drill for oil, I sell it on the open market, the consumer is sovereign. But here's the thing. In a credit deflationary environment, they are price makers.
Right, domestically, that's what's going to happen. Right.
Globally, it's going to happen. Like, again, it's always been our dollars, your problem.
What I mean by domestically versus globally is if there's only one producer of gasoline in the U.S., then they're going to set the price for domestic gasoline.
Yeah, absolutely. And it's just not that difficult. I'm not here to reverse the law of diminishing marginal utility or anything like that. But moments like this are when commodity producers have the ability to set terms, because everybody still needs gas. Everybody still needs diesel fuel and oil and this, that, and everything else. And Klaus Schwab can sit there in his ivory tower wearing his freaking Klingon outfit and screaming, "You will eat the bugs." But I got news for you, dude. You don't control the real flow of capital, because when people get hungry, you wind up with France.
You wind up with collateral.
Yeah, the shortage of. And again, we got back to Alex Krainer's point. It's always about the collateral.
Shortage of commodity collateral right now. And that's
absolutely.
That's because there's a wall, there's a curtain going up between East and West. Absolutely. Yep.
I think we got it.
Harry,
what do you think, Tom?
I think that's a great... Go ahead, Vince.
I was to say, Harry, before we find out some other rabbit will go down.
Well, I'm sure we can come up with a couple more of those, but I think we'll split this into two parts. And I'm very grateful for both of your guys' time today. I think that's a great spot to kind of wrap things up for now, because I think, again, this is something that is incremental and changes as time goes on. I don't think any of this is ever a snap your fingers moment change of the world. And I mean, we've all kind of, I think, come to the same conclusion of cooler heads prevailing from different angles, which I think is really interesting.
Or at least trying to prevail.
Right.
I just want your comment about incremental, just to add to it. People, good geopolitical or portfolio risk managers must think about the worst case scenario. The worst case scenario is it's not incremental. We're prepared for the worst, but you have to assume the best, because if you're constantly thinking the worst is going to happen, which is what you get on basically a mainstream media platform, there's a big announcement. It's the end of the world. Okay, great. It could be the end of the world. Between now and then, what do you want me to do? Oh, they want me to click on an ad? They don't want to help me prepare. So prepare for the worst case scenario, but it's going to happen incrementally. Fits and starts.
Yep. Has to, because ultimately it's not in anybody's best interest for it to happen slowly and then all at once. But
Which
I think
is like the whole China dumping its bonds thing. Yeah.
Right. Or, but you can see from the ECB's perspective that they're getting prepared for a big cataclysmic moment. And it may easily be that, and I think that the catalyst for all of this is Japan ending yield curve control and finally putting a fork in QE. The last major central bank to be involved in QE. I think Ueda is telling everybody, without telling everybody, that he's going to end yield curve control. I'm literally, as I have my Zoom window up here, and underneath that is investing.com and the Japanese, and I'm watching the 15-minute chart of the Japanese 10-year this morning while we're doing this, because I think the Japanese 10-year is like the key to this. And there it is, it's going to end the quarter at 0.4%. Ueda doesn't have to do anything right now because the limit is 0.5%, but when it pushes back to 0.5, Japan is going to be having to deal with with incipient inflation. And they're already there. Mrs. Watanabe is losing 3% on her bonds right now.
Yeah.
She can't.
Or
She won't
the
do
yen
that.
can just go to zero. The yen can just keep going to zero. And
The Bank of Japan will not do that. They will intervene at 150. Absolutely, they will. They did it in December, and they did it 35 years ago. They will do it again. So we're 5 points away from that. Just for those of you, for the traders in the audience, just
that's a good reference point.
Yeah. So let's watch what happens when the yen gets to 150 and see what Ueda does. Right.
That's true. That's right.
Perfect. TomLuongo.me is your website, Tom, and at TFL1728 on Twitter. Vince at SORENTHEK on Twitter, and VBLGoldFix.com, where you write a ton on your Substack, and it's always interesting stuff. Guys, thanks so much for your time today.
Thanks for having me. Thanks for having us.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.